Good morning, retail traders. This is Washboardjim with the Sneaky Snake Trading Strategy, where I talk about chart patterns, moving averages, and being in the now. Well, this is the dilemma that I came up with last month. Not really a dilemma, but I've been using the scanner, Trade Ideas, for many years, many years, and I love Trade Ideas. I love the scanner. It's helped me with a strategy that I've traded for at least 7 to 8 years. But I kind of got away from my roots, the roots of the way I used to trade. Trade Ideas made it more simpler, more easier for me to trade, just like a one kind of style, trading style, where I'd buy the highs, look at the highs and look at the lows and catch the breakouts and things like that. Yeah, I do miss it. I went without it for a whole week. So this was my thought process of what I went through the whole week. I didn't know. I was kind of nervous at first. I've been trading for 20 years, so I got a good background in charting, mostly technical analysis. I've never really been a good fundamental trader. There's only a few facts I need to know about the fundamentals of a stock, and that is, do they have cash? And what's been in the news lately. So I put that being in the news in the now in my 3-step strategy of chart patterns, moving averages, and being in the now. And I still use that philosophy, but I had so many different trading styles, so many different chart patterns, or so many different setups that I kind of got away from that. And I walked away from the MACD, and I walked away from this and that, and I just relied mostly on chart patterns and moving averages as the Trade Ideas scanner was ticking off the tickers. So, at first I thought I'd have to get to the kitchen and grab me some Valiums and drink a shot of vodka. But the first day, I kind of felt nervous. It's like, riding a bike for your childhood and then get back on a bike 20 years later. Are you afraid to crash? And I have to do this. I've been doing this live in Discord and on YouTube, so I've had to go back to my old style of trading. Now like I said, I have nothing to do against Trade Ideas. It was very blissful. It really helped me find new lows and new highs, breakout stocks. It assorted me to low floats and what's really moving in momentum, and I really enjoyed it. I have nothing against it one bit. I loved it. I made good money with it. So I chatted with the room, and I decided that, I'm going to walk away from it and go back to my roots of charting, looking for stocks the hard way, and using scanners that TrendSpider and scanners that Ameritrade, which is now Schwab, have. So I really got into that here. I'm going to go ahead and put up TrendSpider. And I've had TrendSpider for a while, but I never really used it because I had Trade Ideas scanner. But I'm realizing now, after a week of going without it, that I might be missing out on a lot of other learning. My mind kind of froze. It just kind of come complacent. And when you come complacent when you're trading stocks, that's not a good thing. So I'm going to start relying a little bit more on other people's alerts, getting more focused in the room, and just using different kind of scanners. So Trade Ideas has a bunch of scanners that you can use. I mean, not Trade Ideas, but TrendSpider has a bunch of scanners that you can use. And I'm going to start relying and building scans off like Netflix, popping up here. And I'll still stick with my chart patterns, things like that, but I'm going to renew myself, I guess one would say, and go back to the basics. Also, charting. I love charting. I've charted over 2.5 million charts in the 20 years that I do at least 50, 60 charts every day, just going over my watch list, going over and over and over them again. And I have so many different kind of strategies that I've just completely forgot about. I've been using the TTM squeeze for many years, and I've come across traders that are afraid to use the TTM squeeze. They'd rather use just a regular old red green candlestick pattern, maybe, a different kind of setting. Still use the VWAP. I'll go back to using the VWAP more, which I still use the VWAP, and I rely dependently on the VWAP and the 200 SMA for supports and pivot points when I'm using the VWAP. And also have the 9 that will keep me in the trade. So I have different kind of strategies. I have tons of strategies. I mean, I got to looking at all my previous ideas and strategies. I've got the TTM Pro. I got the TTM Pro 2 that I'm going to start using more often. Start studying, actually learning a new wave. I've done this for 20 years. I got complacent for 7 years. So I'm realizing, complacency is not always the answer when it comes to trading. I've got different kind of setups. I've got the ready, set, go setup that I could be using when I'm scalping trades or day trading or swing trading. I realized once I got rid of trade ideas that I haven't been swing trading that much. I used to swing trade a lot. I used to trade pennies a lot. I mean, I traded pennies for 12 years straight. So, different strategies. I've got just a regular different time frame strategy that I could be using. I could go back to using the level 2 more often, reading up on the news. Here's a scan that I built, just a regular old watch list. Go back to using the regular old watch list like I used to use. Using a regular old chart with all my moving averages on it. I really love trading with moving averages as support and resistance levels. I still do that, but I'm going to go back to using maybe a main chart. This is my setup every morning when I come in. And I listen to CNBC. I stopped listening to CNBC, although they sometimes get much under my nerves, and I'm a devil's advocate in their pumps, which they are a big pump station. I think for the first one time all week last week, they had one lady get on there with charts. Actually show you charts, supports and resistance levels to back up her emotion, her calls. These guys on CNBC, they don't do that. They pumped Apple 2 weeks ago as hard as they could. They pumped it. They wanted it to break resistance. And even during the bad news of the Apple Watch ban, and I just, I use them because I'm the devil's advocate to them. I'll do just the opposite of what they say. They've been calling out LLY, for example. LLY is going to break, and they're putting it in the news every day, and all of a sudden we have a big old crash on LLY. And I took advantage of it. I mean, they were pumping this stock to, look at this. If you just look at the chart, we went from 313, 311, all the way up to 100% gain in 1 year. That, to me, is, you don't be pumping stocks like that. You just don't do it. I'm looking at buying puts in this thing. Once this news settles on the fat people, the Weight Watchers, what they, losing weight, they got a big love for this thing. So I'm going to go back to my roots, back to the way I used to think. So I mean, I'm not, like I said, I'm not downing trade ideas. It was an excellent tool and still is for a lot of people, but it makes your mind lazy, I think. You can use it in a different direction. So I've got so many scans, so many strategies that it's beyond belief of how many different strategies that I have that I've accumulated in the 20 years. I've got the Bollinger Bands crossing the 20 EMA. I've got just the regular 9 EMA. I got the E8 EMA. I got the linear channel. I've got the TTM squeeze. I've got the 50 crossing the 200 or the 200 crossing the 50. I got the 20-day EMA at the 200 SMA. I've got scans that have been given to me by other people. I've got Ripster scans on here. I got, daily VWAP Bollinger scan on here. I got the Bollinger Band crosses the 20. I got all kinds of different strategies that I can use, just 100 of them or more. And I'm going to go back to them. I created a Hawaiian scan, the John Carter 10X. We got the moving average exponentials. We got the Parsons pivot points that I customized. We got the pivot point and the RSI VWAP. I've got so many different scans that I could be using and charts that I could be using that I've just neglected for the past 12, 13 years. I've got the 1 year RSI 50 moving averages. I got the John Carter. Let me see. I got Pearson's. I've got the 34 crossing the 200 EMA. These are all breakout scans. I got the SMA 9 crossing the 20 moving average. I got the squeeze pivot points. I got the stick sandwich pattern. I just got so many different scans that I saved throughout my history of time. I've got the linear channel MACD Wilder. I got the single VWAP. I got the Williams alligator on here. I've got the custom study of the TTM trend. I got the candle squeeze. I got the bullish bear indicator. I've just got so many different, the Pearson, the VWAP, RSI, Pearson's. So I'm just going to start going through these scans and what's finding best. The market changes all the time. I'll be using different watch lists. I've got hundreds of different watch lists that I can be using that I've created, along with the regular scans that I have here that Ameritrade Schwab puts out. I can be using all them different scans and trying to find the best one. But I always rely mostly on my watch list. The watch list, I'll take it to high volume. I'll look at the low volume, see if I need to get anything off the chart itself. I've got percentage gainers, percentage losers that I could be looking at every day. What's popping, what's not. Piton had news with TikTok. I think it's excellent news for Piton. That's really a lot of exposure, and I can just imagine what that's going to be like. So I've got my main tickers on here that I go through every day. I could just run through this list and find trades that are simple and easy to find. Tesla's an everyday trade for me. Mara has had that great run. Now she's pulled back. Maybe I want it to pull back to this previous high in here so I can jump on it. NVIDIA is an everyday trader. You got Google. You could be looking at every day and trading Google. We had a triple top up here, shorted it down, didn't hold support, fell on back down to a low support. Google they're pumping Google. CNBC is, and look at it. See, so I don't take their pumps. They pump stocks at all-time highs, okay? Anything that breaks an all-time high, or as it looks like a triple top, any long-term investor knows that a triple top is a sell signal to take profit. And these suckers were pumping this market. If you look at the yearly time frame on this, let's look at just the yearly candle. When I saw this, I went, these people are pumping this stock at a 3-year high. This candle is an inside harmony. So to break resistance, we'd have to break that resistance. This is Google. These are 3-year time frame. If you look at the SPY, that's a sell signal. You got a triple top, 3-year triple top. That's just a complete sell signal. And look what's happened to that chart, to that time frame. Since we hit that all-time triple top high, we've done nothing but pull back 5 days in a row. And I nailed it. I didn't trade it last week could have been my biggest trading week of the year, and I didn't fall through my strategy. I had a $50,000 day in puts that I could have just whipped ass on, and I got out for a measly grand. So I'm going to go back to my roots and start studying what I need to study. I'm not sure if it's going to work out. It probably will, because I can already tell within a week that I'm using my head a little bit more. I had to come up, it's reinventing yourself. Every trader needs to do it. We become complacent. I think trading stocks is a learning experience every day. You're at school every day studying. Some people can, I can get in here and be done within an hour. But I choose to stick around and teach and show people. Sometimes I'm not always right, like last week. It was a tough week for me. It shouldn't have been. It should have been real simple and easy. So I'm going to get back into the trend trading, watching the charts, learning, instead of just relying on a scanner with a new high and new low and scalping and day trading. I'm going to start swing trading more. So some of these strategies that I have are great swing trading strategies. It's like the VWAP Williams Bollinger Band. Studying the RSI, getting in a good trade on the RSI reversal. Looking at the chart patterns more often and trading. I'm just, I just don't want to get complacent. We've got a 3-month linear channel here that I used to use. It's got the RSI Wilder on here. It's got the MACD. It's got the volume. Put this up to 3 months. Sure, I had a 3-month. There's a 3-year. Just follow the linear channel all the way up. Buy it at support. Look for the chart pattern. Here you got an inverse head and shoulders. Would have been a buy signal to me to run that thing up. You got a double bottom, higher low. You got a triple bottom. Boom. 1, 2, 3 in 180 days. 4-hour time frame. That's a buy signal. You got a double top exit idea to get out of the trade. You got a 1, 2, 3 up here. Sell signal. Triple top. No, they don't have to line all the vertically, or they can be horizontal, vertical. They can be anything they want. But you got a 1, 2, 3, get out of the trade. So yeah, I'm going to go back to my roots. There's 3 different opportunities right here. You got a triple bottom. Eventually pulled back to that triple bottom. You've got a triple top for an exit idea. You got an inverse head and shoulders. So you have different strategies. You got a 1, 2, 3 breakout here. Right there, 1, 2, 3 drops. Sell signal from getting in down here at the double bottom. So I'm going to go back to that. I'm going to pick up to where I used to be a fairly. I've learned a lot. Every year I've got better and better and better and better, and I've traded with excellent traders. I got a room full of good traders now. I've traded with Vegas for 5, 7 years. I've traded with this other lady for 4. I traded with this other lady for 3. I love trading with the ladies. They have a different perspective. We've got a couple ladies in the room right now that have kind of opened my eyes up. Everybody trades different, and we got to learn. You got to learn from each other instead of relying on other indicators. Like trade ideas. There's nothing wrong with trade ideas. I love it. I love it. I love it. I love it. I mean, if I was here by myself, I would turn that scanner on and I would make it real simple and new high, new low on the top moving stocks of the day. Apple, You know, I hear AMD new low, I want to look at it. I hear Apple new low, I want to look at it. I hear Google at a new low, I want to look at it. I hear Tesla going down. These are all momentum stocks that have cash. I hear Meta going down, I want to look at it because I want to buy the inverse head and shoulders maybe as it drops, or I want to buy a triple bottom or a falling wedge. So I'm going to implement it in my strategy of the sneaky snake, where I talk about chart patterns, moving averages, and being in the now. So never, the moral of the story is when you feel like you're getting complacent, change it up a little bit. If you got a winning strategy, don't walk away from it. And be patient. That trade idea scanner going off, it makes me want to trade all the time, makes me want to get in and out of stocks more often. Now I'm going to be a little bit slower, a little bit more patient, look for the right setups, and then take the long swings. So we got earnings coming up. I'm really hyped up about the earnings. Banks will be coming out on Friday. I'm going to be set up for all them bank trades. If we get any knives, which my strategy is based on catching knives, that's, you know, I can sit here and catch knives all day. I trade one trade at a time, so I'm not locked up in a bunch of trades. And, you know, I'm going to sit here and catch knives all week. So let's change this back to a different strategy here. Just go to a different chart. This is the TTM Pro. Right now we've got a knife. We're going to clean this up. This is the SPY. I go back to my 5-day rule. We've had 1, 2, 3, 4, 5 days of selling. Now, institutional traders look at 7 days. But as time changes, they move it around. The more volatility, when you get at an all-time double top high, triple top high on a yearly time candlestick, it's a no-brainer that we're going to have a pullback and we're going to set up into earnings and then maybe have a breakout. Now, again, pay close attention. I listen to CNBC. They say the market is the indicator of which way we're going. It predicts 6 months in advance. So they've been pumping this market for 9 weeks, thinking that we were going to have 6 rate cuts in 2024. And that's ludicrous. I mean, that's just mind-boggling. And they were wrong in 2023. They were wrong in 2022. They were wrong in 2021. The Feds were wrong completely. They missed the curve. You can't believe in it. You have to be the devil's advocate. And that's what I am. I'm the devil's advocate. So we're sitting down here. We had a triple top, and it failed. We have the snake. So I'm going to draw this out. This is a great strategy. I love what I've done here. So I'm going to draw this strategy out for you. So we got a triple top, and we got the 200 SMA. We got the 9, and we got the 21. Now this is on a 30-minute time frame. So I'm going to pull this up on a daily. Look at the run we've had on this SPY. This is scary. This is delusional. This is greed at its highest point. Extreme greed. If you look at and I did a video a couple weeks back letting everybody know that we were going to approach a double top up here and to be very cautious. Well, nobody has pointed out the double top all-time high. None of them fat cats, nobody on Twitter, nobody on StockTwits have been calling out a hard resistance. This is all-time high double top. Jimmy called the inverse head and shoulders resistance right here. We pulled back. Jimmy called the inverse. We had the head and shoulders, and we have the inverse down here. So You got a head and shoulders. As we're running up, I noted the room. I said, hey, this shoulder line is going to be a hard resistance. We pulled back. Then we had the inverse head and shoulders for the buy signal on the bottom. We had the left shoulder, the head, the right shoulder for a strong buy. We had the bounce off the 50. We had a falling wedge. And then we had the double top, and we're pulling back. Now, earnings are coming up, so I think we've had a good sharp pullback already, as you can tell. Not a big one. Not a big one. The market is very bullish. Extremely bullish. They've been through hell this year. 15% hedge fund managers made a profit. All they said was buy the dip, buy the dip, buy the dip, buy the dip, buy the dip. Well, if you bought the dip and you run into 2023, you became very wealthy. Their strategy worked. But all throughout the year, they were saying buy the dip, buy the dip. They weren't given any exit ideas, maybe when the pullback was coming, and that's easy to define in a chart pattern. For example, you've got a 1, 2, 3 right here. 1, 2, 3, boom, all-time low. Back up to that trend line, pulled back. Finally, after the fifth time it broke out, still pulled back to the shoulder. You got this pullback right here to the top of a Darvis box. See, this is old strategies that I've learned trading with great traders. You could tell the Darvis box was getting ready to break out. You have a head and shoulders right here. So we came up and we retested that shoulder line. She pulled back to this shoulder line. Boom. She pulled back to the old shoulder line of this head and shoulders. What was resistance now becomes support. Resistance, resistance, resistance. Boom. I think chart patterns are the key to everything. If you just want to pay attention to that. So definitely, I'm going to reinvent myself. I'll probably become more powerful and a lot better trader by doing this. And if you stick around with good traders, which we have in the room, which I have followers that, not too many people follow me. I'm not that ambitious to get out there. But I am live on YouTube every day. There is a delay. You can watch and learn, paper trade. I suggest if you're a slow learner, paper trade for a couple of years. Some people can get in here and just bang it out. Boom, boom, boom. Me, I'm an on hands. It took me a while to learn, and I had mentors. Clay Trader was the first one I ever followed back in 2007, 2008. I was the first one to ever almost have a chat room. Right when the internet came out, we created a chat room. So I've been in 6 or 7 different chat rooms as a moderator, and real good chat rooms, respectable chat rooms. If I felt like they were pump stations, I got out of them. I'm a learning guy. I like to learn and teach. I don't like to pump tickers out that are shitty stocks. I'm going to grab me some tea right here. So I'm going to reinvent myself. Nothing wrong with that. Just don't get complacent is the moral of the story. Trade ideas, don't take me wrong. I love the heck out of you. If you want to give me the program for free, I'll use it and I'll share it like you've never seen anybody share it before. But for right now, I'm going to go back to the basics. That's the sneaky snake trading strategy, where I talk about chart patterns, moving averages, and being in the now. And right now, we've got earnings coming up. It's going to be the catalyst to break that triple top, because there's too many bulls out there right now that are in shock. It's day and night listening to CNBC, the best Santa rally ever, and then they come out this week and said, well, we didn't have the Santa rally. If they had a good chartist on their team, they would know that we hit a freaking triple top on a 3-year time frame, and they would not have been pumping this market. They would have been cautious, and they would have saved a lot of people a lot of money, the people that follow them. So I'm a devil's advocate to them. To me, they're just nothing but a big pump station that puts out different messages and makes people confused. One minute they're bringing out the people that are bullish and going to pump the market up, and then next week they're bringing out the reasons why the market's not going to move. So be the devil's advocate. When they're down and out, that's when you should be thinking about getting into trades. When they're all pumped up and hyped up, that's when you want to start selling. It's real easy. Now, I've been criticized for using this strategy here by so-called novice traders, and I'm going to point it out to you. Some people think that this is only to be used in a yearly time frame. 20 years back, we've only had 2 times where we were fearful or we were very greedy. And I can't see, it would be worthless to use something like that to me. So I use it on a daily pattern, daily time frame, weekly. We're in an extremely greedy spot up here at a triple top. I think we're down here already to where we had panic and despair and capitulation, where people sold out of the market because of fear. Well, that's discouragement, and fear is the best time to be investing. And I use this on a 5-day time frame, weekly time frame. Each one of these represent a week. Sometimes they represent a day. We've had a 5-day sell-off where people were discouraged. But we're going into earnings, and we're going to have dismay. We're going to have hope. Earnings have been forecasted to the downside because so-called institutional buyers were saying, what were they saying? That we were going to have an all-time high run and break out of the triple top up here, and we did not do it. We pulled back instead. Now they're bringing out the media and worried, but I think earnings is going to bring us back to dismay and hope, and then we'll run through the cycle again. Each one of these representing a weekly time frame. Or if I have to, I'll use it in a 1-week period where we had fear because the market sold off on Tuesday. We had despair. Why is it selling off? We had panic. And then we had capitulation. Is it going to keep going? Is it going to keep dropping? No. Fear is the best time for investing. The extreme greed measure is the best time to take profit. So they were telling people to hold the market. Now you bring out people this week saying, no, we took profit. The smart ones came out, or supposedly. No, anybody that knows extreme greed, and you can hear it in people's faces and voices, it's time to boogie. I got out a little bit too soon, I agree, but man, I was discouraged. Why? Why are we running up so strong? It's just because Powell came out and said he's going to stop raising rates. And that gave the market the whole reason to run for 9 weeks in a row, which I told the room, I said, man, I've been here 20 years. I've sat here 20 years, every Christmas, and we barely made a good Santa rally. We had almost a 9-week run of candle after candle after candle after candle. And it was just getting to where it was just extreme greed, and especially when the chart's telling you that we're at a triple top on a yearly candlestick. So now I want to start. We've had the 5-day sell off. I'd like to see us pull back to the 9 and bounce off this previous high. If earnings aren't as good as they think they are, we'll definitely hit that resistance level and call it a support, and then bounce off the 9 and run it up. But week after week after week after week, we just kept running and running and running to a double top. So that was the time to get out of the trade. Same as when we pulled back to the 200. If things get nasty and you see that 200 again on the weekly time frame, I'd be jumping long unless we get nuked. And that's the only thing that I'm deterrent about this year. I don't give a crap what the Fed's going to do. It's not been my leading indicator of trading stocks at all. It's been chart patterns, moving averages, and being in the now. But I knew when the Fed would stop the rate hikes that was going to give the institutional buyers a reason to really run this market up. But them institutional buyers didn't tell you that there was an exit idea at the double top all-time high, which I did. So I could have saved you a lot of money right there. So let's not get complacent. If you feel like that you're having a bad day, walk away. Come back the next morning with a clear mind. You know, people saw me get stuck in a couple good trades last week, and the market just kept going down, and I was lucky to get out of. I had one red day, but I could have had a $50,000 day if I just stuck with my trading strategy. I had to put 10 puts at 270, and it ran up all the way to $3,100. That happened twice last week. It's the big moves that I miss. We'll catch you later. Sneak trade ideas. I love you to death. Thank you very much for the 7 years of success that you gave me. But I'm finding out sometimes when that scanner's going off, I just like to shut it off, not listen to it, have that outer noise, affect me where I should be studying and put a little bit more work in charting, and maybe even have some time to study the fundamentals in this next year. But like I said, cash and news is all I need to know, and if they've had any splits, or if they're in bad news or good news, or the momentum of the market. This is the Sneaky Snake trading strategy, where I talk about chart patterns, moving averages, and being in the now.